following that trend of the performance of crude oil and the prices of varieties of that commodity, the Minister of State for Petroleum Resources in Nigeria, Oil, Senator Heineke Lokpobiri, has said that Nigeria would demand higher oil production quota at the next meeting of the Organization of Petroleum Exporting Countries. It's scheduled for November, that meeting. He said the country's current quota, pegged at 1.5 million barrels per day, no longer reflects its true production capacity. According to him, the upcoming OPEC meeting provides an opportunity for Nigeria to make a strong case for an upward review to at least 2 million barrels per day. He expressed confidence that Nigeria's improved output levels, strengthened infrastructure, and renewed investments in the upstream sector would support the country's case for an increase. The minister said the sustained recovery in production, improved regulatory environment, and fresh inflows of investment into the oil and gas sector have positioned Nigeria to make a strong case for a higher OPEC quota. My guest is the partner at Energy and Chemicals Leader with Deloitte Africa, Mr. Olumide Eson. Thank you so much, Mr. Eson. It's interesting to have you on the program today. Thank you for your time.
Good afternoon, Tolu, and good afternoon to the viewers. Thanks for having me on the show today.
Yes. I want to take it up from the crude oil prices I just looked at now. We still continue to see this flip-flop in that market. I think I want to start our conversation from that end, considering the geopolitical issues, all of the concerns being raised from all quarters. What do you make of the price of crude, the flip-flop that we see as we move towards the end of 2025? What do you think will close the year with? Maybe that's an assumption, or maybe a range of what you think the price of crude would be as we run to the end of 2025.
I mean, thanks, Tolu. I can only make an educated guess, and I would think somewhere between 60 and 65 as well. And as you've partly alluded to, some of the issues impacting the stability of the price includes the geopolitical tensions. That remains unpredictable, and so if it continues in the current trend, then there won't be much of an issue. We can continue with current oil price premise as well. But also it's the increasing output from non-OPEC members. I mean, that is one factor that would influence the amount of barrels in the market. So depending on how OPEC responds, OPEC's strategy to deal with this issue would also have an impact, on the crude price for the rest of the year. And of course, we're seeing some positive trends again from Asia, predominantly, China and India. If that, positivity is sustained, that would generally means increased demand from those two powerhouses, and of course that helps to stabilize oil price for the rest of the year. So I would say that I can't see anything very alarming at this point, but fingers crossed.
Fingers crossed indeed. You see our minister talking about increased demand now. He's saying at the next meeting they're going to request for OPEC to increase increase Nigeria's supply quota and all of that. But some would say a lot of work still needs to be done before we get to that point. I don't know how that comes to you. Is that the right step in the right direction?
Yeah, so just to support the minister, we once produced 2.5 million barrels a day in this. So we can get back to that plateau, which we saw around 2005, thereabouts. So, what the minister is saying is if you look at the trend, there's been sustained growth. Now we about 1.7 million barrels, and we may even still close the year with 1.82 million barrels. So if you look at the current OPEC quota, is only 1.5 million barrels. So let's even assume we have adjustment for condensate of maybe between 200 and 250,000 barrels a day. So you see that we're already almost at that at the point where we need to be asking for headroom from an OPEC quota point of view. So I mean, we've seen significant, I would say, improvement in the industry. We've seen significant final investment decisions, at least 3 of them in the last 1 year or thereabouts. We saw the $515 million of Beta FID, which was taken last year. We saw the Bonga FID of $5 billion taken by Shell last year, and we've seen just a few weeks ago, under $2 billion commitment by Shell to the HI asset. So yes, we're seeing improvements in our own environment for the oil and gas, and so the minister is justified to be asking for an increase in OPEC quota. We've seen increase in rig count, so there's just so much, metrics to support the fact that yes, we should be having those conversations now.
So you think that there is a possibility, because we've done that before, we could even do more, but some will still say there are concerns around host communities, around issues of the PIA and all of these concerns. So when we look at all of this, do you think that is it that easy for us to get to that point at this time? Let me ask that way.
Of course, it's never going to be easy to get to that point, but as a whole, it's a mix of positives and maybe some ambers. I don't really see a red, as it were. So, I mean, for example, with PIA, we're seeing the emergence of a focused regulator, right? All the discretionary powers that the minister had, those discretionary powers, allocation of blocks and all that, are no longer there. We see now a focused, specialized regulator that emerged out of the PIA. That is one thing. The second bit is, whether we like it or not, PIA helped us to resolve the issue of fuel subsidy because of that section, 205 that provides for cost-reflective tariffs. So we now see, Dangote selling at, market price. So PIA provided a formal, statute backing for closure of subsidy regime, and we all are seeing that. Also, the PIA has given us the opportunity of a more commercial focused NNPCL. NNPC is no longer a corporation. You see increasingly they are making more contribution in the fiscal space in terms of taxes. That is the outcome of the PIA. We now see an independent company that will run like another company and will give dividends to us as Nigerians at the end of the day if there is profit. So that's also the outcome of PIA. For me, it's the fact that they now have that level of independence that they never had before. And I think point number 4 for me is the issue of the fiscal space. The PIA did provide some softened fiscals. Ideally, economics should be better under the PIA, but of course, different companies and operators will have different view of that. I mean, I haven't said that. The PIA itself, I've said it several times, it's a journey. It's not a perfect document. And you will see that even after the PIA, there are lots of outstanding issues yet to be resolved. I mean, for example, the institutions, created or to support the PIA are not yet fully all in place. We're still having, conversations around the host community development in section 234 of the PIA, and also issues around the decommissioning in section 233 of PIA. Of course, those are conversations that must really happen between the companies, the operators, and the regulators. How should the PIA fund be set up? What amount of it, if required, need to be set in country? I mean, those kind of conversations are still ongoing. So the PIA is not exactly there. On the fiscal front, whilst the headline tax rate dropped significantly from 85% to 60%, and in some instances for marginal fuels to 45%, I mean, there's still talks around inadequacy of those fiscal terms to energize or make some projects economic. And the government has reacted positively to those by, you saw the executive orders that were issued last year, for non-associated gas. I mean, I would say for once we have a responsive government. The government is very responsive to the need of the industry, and that's identifying the fact that our destinies are tied together as a nation and the oil industry. Why people may argue it's not contributing so much to the GDP. The bottom line is because it's 90% of our effects. If the industry is sick, we're all going to be sick again. Someone once told me that the problem of Nigeria is half solved if you have a sustained, FX inflow from our oil industry. So that conversation needs to be ongoing, and government is responding. So those executive orders that between the government and the industry. I don't think we are there yet, but I think it's a journey, and I think collectively, both the industry and the government, they are moving forward.
You alluded to the fact that this flip-flop that we see now in the pricing of petroleum products generally now. Many would say it was expected considering the fact that we are in a deregulated market. I would also agree to that fact. But as at today, we're buying PMS for above 900 naira, in some cases 930, 920 something naira. We bought for 800 and something naira at the time, and we're all thinking it was still going to continue to drop. But now we saw another increase again. But yesterday I also read where marketers came out to say that landing costs of imported petroleum products is even lesser than what Dangote sells. So this competition continues, this back and forth with regards to pricing continues. You understand this more than I do. I'm just a journalist. Mine is to ask the questions. I think there's something we need to get clear here. Where do we go from here? Do we still continue to import? Do we still, which way to go?
So it's a good question, but we must understand we have a free market. So those who are producing refined products, sell to Nigeria the price they think helps them to make the decent margin they need. And if there are, marketers who feel they can get it cheaper, the same quality, the same spec by importing, and they're all welcome to import. But also know that if you have a refinery, you also can export your refined products. What I can tell is across Africa, across West Africa, you still find the cheapest refined products from Dangote refinery. So, so both have got options. Marketers have got options, and Dangote has got options. And Nigerians, indeed, these days have options on where to buy. In fact, some Nigerians now use CNG, as you know. And some of them use, the trains these days. So we increase the options. That is what the free market is all about.
So we should expect more of that that flip-flop in the market as we move on. Well, let's take a step further and talk about investment. You've talked about what's been happening, and I know we've had that conversation on this show, commending President Bola Tinubu, of course, and the special advisor to the president on energy, what they've been doing to drive that investment in Nigeria. But let me ask layman, how sustainable are all of these executive orders and all of that? Are they not going to, in one way or the other, also disrupt some of the maybe aspects or segments of the Petroleum Industry Act?
No, so I don't necessarily think so. So first, as you may be aware, we have new sets of tax laws in Nigeria. The Nigerian Tax Act, Nigerian Tax Administration Act, the Nigerian Revenue Service Act. So and what you would observe is a lot of executive orders and provisions of the PIA, Deepwater Act, and PPT have already all been reflected in this set of acts. So they are literally in the act. If there is anyone that is not even specifically in the act, there is a grandfathering provision in the act which basically recognize all executive orders and regulations that have been issued by the government. So nothing is left out of the act. So there is a legal basis for those executive orders. Yeah. And when we think about a sustained partnership between the industry and government, is something that we all should be excited about. I was at the African Oil Week a couple of weeks ago. In fact, I moderated a session that had the Honorable Minister of State for Petroleum Resources on, and you could see the commitment of the minister to the industry. They want to collaborate. They want to encourage the industry. And for those that participated at the African Energy Week just a few weeks ago or so in Cape Town, South Africa, it's the same message. Both the industry and government are engaging. So government needs to engage more with the industry and also continue to listen to their concerns, because that's the only way we hear firsthand from them. People who invest in the oil industry, they don't do so based on sentiments. The decision is purely based on economics. Okay, so if they say to you that the economics is not working in Nigeria, when they rank the investment profile, if Nigeria is not ranking in terms of IRR, rate of returns, or in terms of NPV, then they move investment elsewhere. Africa is so rich. From our end in West Africa, from Cote d'Ivoire, where we have the West African Transmission Margin, to Ghana, to the Gulf of Guinea, there's resources everywhere. If you go down to the Orange Basin, where you have Namibia and South Africa, there are deposits there. If you go to the East African Rift in Tanzania, in Mozambique, there is a lot of resources there. So even within Africa alone, these investors will rank and take their money to where they think it gets the best returns. Even independent companies in Nigeria are taking their investments out of Nigeria. So government needs to engage them, needs to make it more conducive for them. The economics needs to work. There is no sentiment. Remember, you're competing for capital, right? So your economics must work, and that is why the other issues in Nigeria need to be fixed around insecurity. I mean, that has been, if you like, largely dealt with that, but it must be sustained. The issues around security must be sustained. There's the issue around contracting cycle, NCDMB and all of that. There is an executive order for that as well, just to address and cut through those complexity to reduce the contracting cycle. Government needs to sustain that, need to see it through. There's the issue around the cost premium. It's expensive to produce in Nigeria. In fact, our own organization issued a report recently on the outlook for West African oil and gas. And one of the things that came up there is the issue of the cost premium. It's somehow expensive still to produce in West Africa than elsewhere. So it needs to be addressed by the government. I mean, if government can address these issues, address infrastructure, deficits in the industry, you will see more investments coming to Nigeria. Not just Nigerian companies investing, but foreign companies actually investing more in this industry, particularly in the gas space, which is, it's a transition fuel that's going to be around for some time to come. You will see increased investment in the upstream, and you will see new, floating liquefied natural gas plants coming to Nigeria because everybody wants to invest in gas.
Well, finally, before I let you go, reports from the NUPRC shows that we have about local operators now account for about 30% that's of Nigeria's oil production. I think that's pretty good news. And how would you react to it?
Yes, I don't think it's more than 30%, to be honest. I think those guys are producing, north of 30%. If you look at the recent, large acquisitions, I'm referring to Renaissance and Seplat, amongst others. So it's a positive, development. I think what government needs to be mindful of is you need to help them with capacity development, really. For the international oil companies, they have a lot of capacity in their parent company headquarters, So government needs to support from a policy perspective such that we can have homegrown centers of excellence, for exploration, for reservoir engineering and all of that in our various institutions, so they can support the local industry. So there is a lot of work to be done in that space. That's one. And then two is funding. Increasingly, it's challenging to raise funds outside. It's expensive on the dollar. So African Energy Bank is a positive addition. Take off grant of $5 billion, but we'll need more than that. If these companies, independent companies, are going to do more exploration work, do more development works, they need funding. So, government needs to find a way, around structured finance for these companies. So if you can support them from a policy-wise, from funding, from infrastructure, I think they can do more. They can do more. Nigeria has been in this business for over 50 years. There's no reason why, the independents should even be doing more than 40% at this time.
Well, it's an interesting one as always. Mr. Olumide Esan is partner and energy and chemicals leader, Deloitte Africa. Thank you so much for your time. Do enjoy the rest of your day.
It's a pleasure. Thank you, Tolu, for inviting me. Yeah.
tell you that Transnational Corporation PLC Transcorp, one of Africa's leading listed conglomerates, has announced its unaudited financial results for the third quarter of 2025, showcasing strong performance and consistent growth across all business segments. The group recorded a 39% year-on-year increase in revenue, rising from 297.7 billion naira in Q3 2024 to 413.4 billion naira in Q3 2025. Profit before tax also grew by 18%, reaching over 124 billion naira compared to 105.5 billion naira recorded in the same period last year. Now, this impressive performance reflects Transcorp's resilient business model and operational excellence, as all its subsidiaries posted significant growth. Now, the group's power sector benefited from increased generation capacity, while its hospitality business expanded with the addition of 5,000 capacity Transcorp Center Abuja, contributing to a stronger revenue base. And according to the unaudited results, profit after tax rose by 20.5%, reaching 91.4 billion naira, up from 75.9 billion naira in Q3 of 2024. Now, commenting on the results, the group's chairman, Mr. Tony Elumelu, says Transcorp's strong revenue and earnings reflects the vast opportunities within the Nigerian economy, adding that the conglomerate's diversified portfolio continues to give investors access to key drivers of national growth. Now, also speaking on the results, President and Group CEO of Transcorp, Dr. Owen Omajafo, notes that the company's Q3 2025 performance underscores a successful execution of its strategic initiatives and continued commitment to portfolio-wide efficiency.